A trader's crash here. It's 21st of January 2024. I'm going to be doing an overview of my impact trading system. Quick disclaimer, I'm not a professional. I'm not giving trade recommendations. Do your own research. I accept no liability whatsoever for any loss or damages you may occur. Trading is risky. Past performance is not indicative of future results, and it involves substantial risk of loss. Carefully consider when trading whether trading is suitable for you in light of your circumstances, knowledge, and financial resources. Okay, on to my impact trading system. It's a multi-technique based system. I have my crashes clock as number one. Number two, I have structured trade ups on a larger time frame. I have a sniper system, which is shorter structural time frame trades. And then I do book map trade setups and analysis. By combining all four of these structural trades with the clock rotation, you get enhanced confluence and potential gains out of that because you can hold trades for longer. And I will show you some of that here in a couple minutes. Most trades are in a direction of a trend, although I do have a few counter trend trades. And all examples seen here today are going to be off the NQ, MNQ. First thing I have is crashes clock. This is time and price based cycles. They get projections for those highs and lows, both on a multi-day continuous rotation cycle and intraday turns themselves. All of these multi-day and intraday turns are identified pre-market. Let's look at the week of the 15th to the 19th. The 15th was MLK bank holiday. So we'll start off with the 16th on Tuesday. Just again, this is just an overview showing how each day we give 4 to 6 rotations per day. And this is on a multi-day basis where the pattern repeats off of a specific cycle. This cycle is based off of the professional trading firms on Wall Street. It is not a very well-known piece of information, so let me just give you a quick overview of it. On this particular day, and just recognize that this is a 10-minute chart on the MNQ, and I am in Pacific Standard Time. So for me, the market opens at 6:30 Pacific Standard Time, 9:30 Eastern. Again, market opens at 6:30 today on Tuesday. I'm looking for a spill down, followed by an AM high, followed by a AM low into another mid AM high, to be followed by a longer break in between rotations coming down to a PM low, and then closing at the PM high of the day. This was a failed cycle as price could not recover above the day one low of 16,936. Let's move on to the 17th. For this particular day, we were looking for a spill down again. We had a very strong ABC down into a violation level. Then we had a late AM high that took us to another ABC down into the AM low. And then we closed off of the PM high. Again, a failed cycle as price could not recover above the first part of the cycle. But it certainly tried with this massive short squeeze. On the 18th, this time we were reversing the spill to be a spill up. We were going to come down to an AM low. We had a impact trading system buy signal down here. This is called the ACE line. I'll talk more about that in just a second. To be followed up by a squeeze into the AM high, where we had liquidity zones, structural change, and then we come down to a PM low right on time into our Eagle line, our Eagle trade, which produces 20 to 25 points minimum per trade. And then we keep coming up here and we close on the high of the day again. Note that this was a massive push where ODTE option flow pushed the price to the closing highs of the day from the PM low to the PM high. Looking at the 19th Friday, man, what an amazing day. Around 400 points. This is a wild card day. We called this the night before in a video that I made, but we were looking for an AM low. Again, it hit some buy signals inside of my trading system. From the spill to the AM low, we're expecting an AM high where we got some exhaustion. Came back down for a very brief pullback to buy at our Fox 3 line in the direction of the continuation of the trend up, where we ended up having a PM high followed by a PM low, and then the market just could not stop. So for the last 30 minutes of the market, we continue to push up and even into the after hours time frame. The cycle objective had been fulfilled, which was 17,156. So bulls were dominant on this day. So that's 4 days of just seeing how we can have 4 to 6 rotations per day that are pre-identified. Now let's go look at structured trades. We have about 10, roughly 10 structured trades, a couple more. We also have some opening range trades and some mock closing trades. Let me just point out 4 of the trades that are structured trades that reoccur daily. I already highlighted a couple of them, but we have an H trade that sets up repeatedly, producing 50 to 100 points. We have a crash trade, which can tend to be a counter trend trade, which is going to be 50 to 100 points move. I have a treasure box trade setup that repeatedly produces 40 to 70 points. And then I have an eagle trade that we kind of showed there for a minute that has 25 plus points each time it repeats. Let's look at this particular ace trade. This is on the 19th of January, the last day of the week, this Friday. It produced a potential 385 points. Absolutely an abnormal day, but it's not abnormal to hit the line and to climb for at least 50 to 100 points. We have an entry at the combo ace line, and on this particular chart, as you'll see, this is the ace line, which is in green. I did a quick price chart calculation, which shows that we went up 385 points if you took this trade and held it to the highs of the day. This is the ace line right here that moves down. Once price comes and hits it, we get a bounce off of it. And I'll show you a trade in the opposite direction of an ace line in a slide here in a second. Let's look at the 18th, the day prior. Okay, we had 2 entries on this day. The first entry produced 127 points when it hit the ace line. And you can see that this is a price calc from the point of hitting the line up to the high of this move. Again, we hit it again, bounce back above it. Once we cross below and cross back above, we take it as another entry and we look for 50 to 100 points. In this particular example, we had a great short squeeze that took us up 137 points. If you held on to it or took some profit off and added to it at our shark line here, then you could have carried it all the way up to 190 points from the first entry point. So this second entry gave us 137 to 190 points. We had multiple points of confluence down here, which again we'll talk in another briefing. The eagle trade, here's an eagle trade followed by the H trade that I just showed you. This kind of puts it together. I have 2 clouds. I can take off any cloud I want. In the other slides, I did not have the magenta and the lime green cloud just for ease of dumbing down the chart a little bit because there are a lot of lines here and it does get a little convoluted without having some further explanation. But in this example, I zoom out a little bit. I put the cloud back up. You can see that we had a buy signal down here. We have a buy cloud. We come up to the top. And we come back and we pull back. So the direction of the trade now is up. We take our first pullback move to the eagle trade. We can usually get between 1 and 3 eagle trades in this particular type setup. Each one of these takes 20 to 25 points. So the first time that we took the trade, we hit our eagle line. We get 20 to 25 points. We look for a pullback, double bottom testing, and then another move in the direction of the trend. This time it took us a little bit more than 20 to 25 points. And in this case, it actually took us up to the bear ace line, which case, once it pops above and comes back below, we enter into the trade. Again, we're looking for 50 to 100 points. In this particular example, it took us down to about 53 points. All right, that was the longer-term structural trades. Let's look real quickly at the sniper system. This is a series of ITS bear and bull lines. And what this does is it shows us the ability to see momentum change. I'm going to briefly go through this because it gets a little complex. So you do have to spend some time learning the system. But basically, the lines in the reds and the browns, and the oranges are bear lines. Stuff that's in greens and blues are going to be bullish lines. and we're showing you a downtrend here. I'm showing you a change in momentum. All right, so the red background to blue background goes to positive, back to red background negative, to positive to negative. But we see that we get a structural shift here with the impact trading system ITS 6 line. That's what changes the color backgrounds. And what we were basically doing is we were looking for first touch, first pullback, entry points into each one of these lines. So this yellow line right here is the ITS 4 line. This orange line is the 6. Pink is the 10. Purple's the 15. And the orange is the 20. I'm looking for a pullback into the first touch of the yellow line for a move down. Then I'm going to be following the lines down, and I'm going to be looking for a first touch of the 6 line to enter into the trade in the continuation of the downtrend. And then again, I'm going to be looking for a pullback to the next line in sequence, which is the ITS pink bear 10 line. And then I'll be carrying that in a continuation of the trend. So again, trade entry at the first pullback to each ITS line, 4, then 6, then 10. Your initial stops only need to be around 15 to 20 points max at the ITS line that's above the line that you're entering. So if I enter in a trade at the 4, I put my stops above the 6. If I'm entering in a trade at the 6, I put my stops above the pink 10. If I'm entering a trade at the 10, I put my stops at the at the 15 line. Once you enter the trade, you can lower your stops to be at the next line above your entry line. So for example, if you short the ITS 6 bear line right here, I'd put a stop right at the pink line. And then as price continues to flow down, I just keep lowering my stop on the pink line and either get out somewhere else that's learned within the system, or worst case, to where I get stopped out because I keep lowering my stops. You can see that we have a stacking of ITS bear lines here showing downward pressure. So there's more bear lines above us than there were bullish lines above us. So we can see that we have a downward momentum cycle. This could coordinate with a AM high to low. In this case, this is probably the spill, actually, from the opening down to the spill at 7 o'clock. Let's look at this particular chart. On this chart, for 3 trades, the one that I just showed you, okay, this was 3 trades. Entries at the 4, 6, and 10 line. But let's look at it a little bit closer. If you entered the trade at the first touch of the 4 to the yellow line and you wrote it down to the next 6 line, because remember, we're lowering our stops at the line above it. So if I enter into 4, my stops are on the 6. I finally get stopped out here. That's 48 points. I take a second trade entering into the first pullback of the next line in order, the next line in sequence, which is the 6. I'm going to get 12 points out of that before I get stopped out. Then if I look for a third entry on this particular chart, I've gone to the 4, the 6. Now I'm looking at the pink 10. If I enter into the first touch of the pink 10 line and I put my stops above the purple, all right, I'm going to follow the trade down for about 42 points until I get stopped out because I have my stops on the purple line. And again, as I'm lowering it down, I'm actually going to take it to the trade entry line that I went on. So when I set it at first, it's going to be the purple point. That's only 11 points stop that needs to be for this structural trade setup. Then as the trade comes down, I can lower my stop to the pink line. And as soon as it bounces back up to the pink line, I get stopped out for 42 points. That's 102 points in 30 minutes. Again, the vertical white lines in here are just showing the initial trades. Stops only need to be 15 points. Then you keep lowering the stops as the ITS lines migrate down. All right, on this particular chart, we get 4 trades for 111 points in about an hour and a half. I'm showing a chart where we have a downward cycle momentum. It's what we were actually looking at here on the 17th of January. And now I'm showing the shift to a positive change in momentum. If you were to snipe at the first touch, first pullback of the bullish ATR4, so it's yellow for the bear, it's white for the bull, okay, showing a momentum shift. I take the first touch of the white line I'm going to get 13 points. Now that I've already touched the white line, I follow my eyes up to the green, to the blue line, and I'm looking for a first touch of the ITS 6 line. If I enter in here and I put my stops at the next line, which is the 10, and I ride that up, and after I climb up to the next line here, I raise my stops to the blue, because that's the line I entered in, I will not get stopped out till right up here. You can see this white line shows us that that's a 64-point climb that we would have never gotten stopped out by following this 10 to 15 point stop out procedure. Again, 111 points in an hour and a half. In this particular case, you can see that we have bear lines stacking above us, but we have the momentum and shift. And then we start getting the stacking of the bull ITS lines showing bullish pressure on the way up. All right, one more. We're going to show you from the 18th of January, one trade, 46 points in 12 minutes. Here we get a shift with a double top. We get a shift down to a negative momentum as seen by the color change in the background. We see the building up of the ITS lines, and we can see that these ITS lines end up becoming kind of exponentially sharp down and very close to each other, showing it is a quick, strong, powerful move. This change in momentum, if we took it from the blue to the red, we took the first touch of the yellow, the first pullback to the yellow, right? Or even if we miss that, we could take the first, because this happens so fast, maybe, we take the first touch of the 6. So let's say we missed all of this because we just couldn't follow it fast enough because it occurred with a quick sweep down. But we're looking after that first impulse move, we're looking for a pullback to the ITS 6, the orange 6 line. I enter into that ITS line right here, and I follow it down with the stops above on the pink line. Once I get a little bit of momentum going, I pull my stops down to the yellow, and I continue to hold it. In that case, I still would not have gotten stopped out here, even though it came close. And I ride it all the way down to this point right here. That's 46 points in 12 minutes. All right, let's just have a summary overview, putting it all together with a confluence of trades. In this case, I turned my cloud back on. So I have my main cloud, which is a shaded red and green. And then I have the magenta and lime green. Once I see at the opening bell that price gives us the impulse move above. So the price cloud goes up above the main cloud. I'm looking for a first pullback in the direction of the trend that we just had up. And we notice that the rotation for the day was to give us a spill down with an AM rotation high. So the opening bell gives us a push up, a push down, a little bit of choppiness, obviously, but we get the spill down, and then from there, we get a thrust up. The green lime cloud with price goes above the main cloud. Now I'm looking for a pullback. I have a confluence of the tiger shark line, which is the orange line, my eagle line, which is a very powerful line, the viper line, which is in red, my aim 9 line, which is in the yellow. And then on top of that, as you can see, I have the ITS sniping lines. On here, I have an overlay of the ITS sniper line here as well. So with all these confluence of factors on this first pullback, I'm looking to enter into a trade and look for a continuation trade until the AM high rotation has been met from a time and price perspective. All right, guys, that's all we're going to talk about for today. Remember, check 6 and protect your capital. Crash out.